Technology is on fire, surging 2.32% this week. A key regulatory decision looms, threatening to upend the sector. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we find ourselves in a market environment characterized by normal conditions, with the VIX sitting at 19.2, indicating a relatively calm atmosphere. Within this context, the technology sector is particularly noteworthy, as it has been outperforming the broader S&P 500 this week. The sector ETF, QQQ, has seen a notable gain of 2.32%, which is a significant move considering the current market regime. This surge in technology is likely driven by the ongoing digital transformation and the sector's ability to adapt to changing economic conditions. As a result, technology deserves our attention right now, given its potential to drive growth and innovation in the months ahead. As we delve deeper into the sector, it is essential to remember that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The technology sector, as represented by the QQQ ETF, has demonstrated a notable weekly gain of 2.32% and a significant monthly increase of 12.94%, underscoring the strong momentum currently driving this space. The Relative Strength Index, or RSI, is reading 72, which implies that while the sector is not yet in overbought territory, it is approaching levels that could suggest a period of consolidation may be necessary to sustain the longer-term uptrend. The neutral signal from the RSI indicates that the trend direction is still upward, but with diminishing conviction, suggesting that the sector may be due for a pause or a period of sideways movement. Key support levels are likely to be tested should the sector experience a pullback, while resistance levels may cap the upside in the near term. The current move does look like a sustainable breakout, given the strength of the momentum, but it also carries the risk of an extended overreach, which could lead to a corrective phase. This week, we will be watching the technical setup closely for signs of a potential consolidation, which could ultimately reinforce the sector's foundation for further gains. Now let us look at the fundamental catalysts driving this sector. As we enter the week of April 27 to May 1, 2026, the technology sector, encompassing tech, semiconductors, software, and AI, is expected to be influenced by several key macroeconomic events. The upcoming PCE inflation data and FOMC rate decision will be closely watched, as they can impact the sector's growth trajectory. In normal market conditions, with the VIX at 19.2, investors are looking for signs of stability and growth. Key stocks such as AAPL, MSFT, NVDA, GOOGL, and Meta are signaling a relatively healthy sector, with some companies continuing to innovate and expand their offerings. This week, we will see some earnings reports from smaller players in the sector, which could provide further insight into the health of the industry. Regulatory news is also on the radar, particularly around AI development and deployment. The longer-term fundamental thesis for being positioned in the technology sector remains strong, driven by the ongoing demand for digital transformation, cloud computing, and artificial intelligence. The sector's ability to innovate and adapt to changing consumer and business needs will continue to drive growth. Next, let us talk about the specific risks you need to manage this week. The technology sector is facing several key risks this week, including regulatory uncertainty, supply chain disruptions, and valuation multiples coming under scrutiny. Given the current volatility environment, with the VIX at 19.2, investors should be mindful of position sizing, as even small changes in market sentiment can have a significant impact on portfolio performance. Unexpected headwinds, such as geopolitical events or sudden changes in consumer behavior, can also pose a threat to technology investors. To manage downside exposure, a disciplined framework is essential, including setting clear stop-loss levels, diversifying across subsectors, and maintaining a cash allocation to take advantage of potential buying opportunities. By taking a proactive approach to risk management, investors can better navigate the complexities of the technology sector. And now for the strategic outlook, where does technology stand heading into next week? This week we remain neutral on the technology sector, citing mixed earnings and valuation concerns. Investors should track the cloud computing theme, which continues to show resilience. Remember, this is educational content and not financial advice. If you found this analysis helpful, please like, subscribe to Financial Market Oracle, and comment your technology watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.